Danger incoming. 3 things to discuss. Number 1, there's a perfect storm of mega threats heading our way, according to a major economist sitting and watching the Davos conference and listening to what is being talked about over there. Number 2, new cracks show in the U.S. economy with mass scale layoffs and complete economic depravity. What is the data and what does it suggest is happening? And lastly, number 3, I want to talk about how we found a massive short squeeze candidate that soared today on a naked shorting investigation and what to know moving forward because there's a new catalyst not too far ahead. Let's get to work. Timestamps down below. Noted economist Nouriel Roubini is at Davos and he just published quite an alarming letter he titled Sleepwalking on Mega Threat Mountain. I'm going to give you the highlights on it, but I'll link to it below if you want to read the full thing. A host of interconnected megathreats is imperiling our future. While some of these have been long in the making, others are new. The stubbornly low inflation of the pre-pandemic period has given way to today's excessively high inflation. Secular stagnation, perpetually low growth owing to weak aggregate demand has evolved into stagflation as negative aggregate supply shocks have combined with the effects of loose monetary and fiscal policy. He goes on, where once interest rates were too low or even negative, they have now been rising fast, driving up borrowing costs and creating the risk of cascading debt crises. The age of hyperglobalization, free trade, offshoring, and just-in-time supply chains has yielded to a new era of deglobalization, protectionism, reshoring, secure trade, and just-in-case supply chain redundancies. He goes on to further cite the decade's high risk of both cold and hot wars, climate change problems, the risk of AI to employment and widening inequality, and the invention of deadlier and deadlier and deadlier forms of weaponry. So stagflation, debt crises, deglobalization, protectionism, supply chain redundancies, and even war. All of these things together are leading to what conclusion as to where our economy is heading? Well, he says we are therefore facing not only the worst of the 1970s, which reported negative aggregate supply shocks, but also the worst of the 2007-2008 period, dangerously high debt ratios, and the worst of the 1930s. A new geopolitical depression is increasing the likelihood of cold and hot wars that could all too easily overlap and spin out of control. So he is saying the coming crisis will embody some of the worst parts of the most often cited economic collapses throughout history. Roubini warns, whatever one's favorite terminology for describing the current moment, there is widespread agreement that we are facing unprecedented, unusual, and unexpected levels of uncertainty, auguring a future of crisis, instability, and conflict. But whether we will actually do anything about it remains to be seen. Okay, so I know what you're thinking. If you follow finance news, you know that this economist is nicknamed Dr. Doom for a reason. You may even say, Charlie, I wish you would talk more about people who are actually optimistic about this economy. For example, Mr. Joe Biden seems pretty optimistic. But the point I'm trying to make here is not so much that Dr. Doom is right on all of his predictions, but at what point do you have so many compounding threats that it just becomes naive to say that we'll be able to avoid fallout from every single one of them? Because that's kind of what you have to believe right now if you believe that everything is going to be fine and dandy moving forward. You have to believe that the many, many threats are just going to be swept under the rug and everything is just going to build. It's going to be fantastic at the same time where the Fed continues to raise rates. Next up, layoffs. So if you've been following the news, you've noticed a ton of companies laying off thousands and thousands of workers just in this first month of 2023. Some major examples include Microsoft, Amazon, Salesforce, many other tech companies. The Economic Times reports that tech companies are laying off 1,600 workers per day, and it's increasing at an exponential pace. And this is in addition to the end of 2022 being a massive year for layoffs as well. Shocker, many in the media are already working overtime trying to explain away these layoffs. Think big tech's thousands of layoffs indicate a coming recession. Well, think again, Vox. Layoffs in tech, media, and finance don't mean you're getting laid off too. It's funny how every stage of this economic contraction, the media has to narrative handle and say, oh, this isn't a big deal because of X, Y, Z. It could be worse. It could be way, way worse. Don't worry. Don't panic. Nothing wrong here. And then when the next new low is reached, they say the same thing and it just keeps going all the way down. And usually the argument that you're seeing right now is, okay, sure. Yes, we're seeing skyrocketing layoffs, but they are still a small number compared to the sheer number of employed workers we have and the sheer number of available jobs left. We heard a much louder version of this back last year when they were doing this as well. But the funny thing about a trend is that when a trend starts and it starts compounding and it starts snowballing, well, guess what? It just keeps getting bigger and bigger and bigger. And the gap between number of available jobs and people being laid off keeps closing. And eventually they flip and all of a sudden the people laid off no longer have jobs they can find. In other news, Americans aren't doing so well cash-wise either. Apparently 30% of Americans say they will rely on tax refunds to make ends meet this year. Nearly a quarter, 24%, are planning to use that check to pay for necessities. Gen Z, 40% of them, and millennials, 46% of them, count on the tax time cash infusion the most. Oof, not great, folks. For such a supposedly strong economy, we sure have a lot of people on the edge to pay for just their basic necessities. Another problem with this, well, firstly, the average American expects a greater refund this year as compared to last year, but in fact, the IRS is saying the average refund will be less because of certain changes in deductions and the end of the stimulus programs, which allowed for additional stimulus payments alongside refunds in some cases. Secondly, the IRS was pretty damn late on tax refunds the last couple of years. They had a backlog of millions of returns held up, and it could happen again, meaning that a lot of Americans could be waiting for that check, right? Things got so bad that the IRS had to come out and say, don't rely on receiving a refund by a certain date, especially when making major purchases or paying bills, but yet that's what a lot of Americans are doing right now. Moving on, a lot of analysts are under factoring in the large number of Americans who are reliant on government post-COVID and what's going to happen as the rug gets more and more pulled. There's a lot more people that need aid that didn't pre-pandemic. In 2021, Congress expanded the child tax credit as part of the American Rescue Plan. Previously, the CTC gave most middle-income parents $2,000 per child, but with the American Rescue Plan, the expansion increased the amount to $3,600 per child. The eligibility criteria also broadened to reach more economically disadvantaged children, offering the credit to families who paid no federal income tax. But these are coming to an end very, very soon, and a lot of families will be pushed right over the edge. Despite helping an estimated 61 million children in 36 million households across the country, Congress has yet again failed to pass the expansion. So this says one big thing. It says that a lot of parents are so disenfranchised in this economy that they think that the only solution left for them is permanent government aid. Remember, this is a tax credit that goes to families who don't make enough to pay even federal income tax post-deductions. About 40% of U.S. households didn't even pay federal income tax in 2022, and that's a vast improvement from other years. But many folks were hoping that this would become a permanent staple for these American parents that need the aid so that they could take their kids to adulthood, because many families in this economy feel there's no other option but to live on the government aid. And so the bigger picture is, if tens of millions of families need to be endlessly reliant on government, that means that the overall economy just simply isn't strong enough to support them. Now look, I know the politics here. I'm sure there's some people who are lazy or working under the table or whatever, but I imagine the vast majority of parents who work full-time would choose higher paying jobs if the economy would readily support that, or wouldn't be as much in poverty had inflation not eroded their paychecks because of the sloppy government spending policies over the previous years. Think about this from a bigger picture standpoint. This is a massive, massive problem. Not only has the economic recovery of the last 2 years not been enough for many, many Americans, but the Fed is now working to weaken the economy and make things even worse. So if this many people are this reliant on government before the massive economic crisis that we are heading into, imagine how many more are going to be reliant on it during and after the crisis, right? Next, trade ideas. So this morning we had 7 tickers on the briefing's catalyst list, and of the ones that were top tier red alert status, you had your Genus and your NRSN. NRSN ran from 241 to 291 at highs. The main run happened too early and it fizzled out way too fast. The first one though, Genus, oof. We briefed on it at about 70 cents and it ran to 215 at highs, which was a 207% run briefing price to highs. And it was a very unusual catalyst. The company Genius Group, not to be confused with Genius Brands International, formed a task force headed by an ex-FBI official to investigate illegal short selling of their stock. I saw this morning and I thought, okay, not only is this going to bring a lot of attention to the short squeeze setup on the stock, which is mostly happening behind the scenes, but it's also going to send a message to markets that there may be illegal shorting here. And that is exactly what has happened. I mean, it continued running into open and then boom, just exploded in a stair-step pattern until it hit 215. And this stock has a new new catalyst ahead for it yet. It is issuing a special dividend to all shareholders, which management believes may help to expose those who have participated in market manipulation relating to the company's ordinary shares. Genius Group expects to provide further details about this proposed special dividend shortly. This certainly has some AMC Ape vibes to it, but it's unclear whether this will be dilutive like Ape was. And either way, I think that overall, after this rally dies off, the next opportunity is that special dividend anticipation whenever they clarify what that's going to be. But really, today's run probably shows that there's something ugly going on behind the scenes with these short sellers attacking many of these small cap stocks. And this isn't even a stock with much public short interest. Who knows what is going on behind the scenes here? It must be substantial enough to warrant an investigation, though. That's all I'm saying. And bigger picture, if this is what happens when one company decides to investigate naked short selling on its stock, imagine what would happen to the many other companies who may also be overly attacked by short sellers and perhaps naked short selling. And I believe you're going to see a lot more of these short squeezes in the coming weeks. Usually squeezes are a domino effect and other stocks follow with more squeeze revolutions, or as some would say, squeeze-olutions. Obviously, not all of our briefing ideas work out, but this is the power of showing up every single day, doing the work, researching what news items are dropping and what different catalysts are dropping, and then narrowing down those stocks. Quite frankly, I mean, a lot of times when you find a catalyst, it might not do what you want. Today, for example, a lot of our stocks hit their bear criteria instead of their bull criteria as the market got sucked downward. But the point is there are thousands and thousands of stocks in the market, and the key when you're making your own morning briefings or the value in reading ours is narrowing them down so that instead of trying to find one in 1,000, you can find a few actionable trade ideas in a list of several. Some days are better than others and so on and so forth, but this is the power of waking up and doing your research. Now, if you'd like to join us for our step-by-step lessons, private chat, daily morning briefings, and other resources, I will put the link to ZipTrader U down below. Also, our MLK Junior coupon code expired this week, and I got messages from you upset that you were too late to find out about it. And so in order to celebrate the Genius or GNS run, I'll activate coupon code GNS, which will be good for another 24 hours from the release of this video. But that is it for the big sales until at least Valentine's Day, and we aren't feeling super romantic this year, so we'll have to see about that. Although at the same time, yeah, nothing says I love you to that special someone more than a ZipTrader U membership, so we'll try to have a heart for Valentine's Day. We'll see. Have a good one, folks, and I'll see you in the next video. Make sure to ravish those buttons, to subscribe, and of course, comment down below if you have any topics you'd like us to discuss or any tickers you'd like us to cover.